Good morning. Thank you for joining us on Trading Hour. I'm Surabhi Upadhyay and with me is Prashant Nair. And what we have on the screens today is just clear disappointment. The packages have come and gone and the market's verdict is very, very evident. Net result 3% down on the Nifty and the Sensex right now, and India is the worst performing market on the Asian screen as well. So the contrast would be important to keep in mind, because most of the other Asian markets are flat to actually even mildly positive. But we have our own economic package verdict perhaps that's playing out right now. So 300 points lower on the Nifty, and just take a look at the Bank Nifty. That index, just the bottom seems to have given way. We're down nearly 1,200 points on the Nifty Bank. The market is now back to where it was around the 14th or 15th of April. So we're back to the lows that we saw last month. And in the month of May itself, the Nifty has lost 10%. The Bank Nifty has lost 18%. That's some serious underperformance by India. Prashant, good morning. Somber Monday to begin with. How are you looking at this big decline that we're witnessing right now?
So what I'm going to do here is today present to you the overall health of the market, right? Now, a disclaimer, we have a big day on our hands today in terms of decline. So the price values would change in some cases, meaningfully. But I think it broadly will point you in the general right direction. And what I'm trying to do is looking at how prices have moved from the absolute lows when the Nifty made a bottom on the 24th of March at 7,511, and all the prices for the 1,767 stocks that we are looking at is respective prices as of the close of the 24th of March. Okay, so this is essentially the big picture which I want to present. Again, this is all as of Friday's close, last close, right? Because prices, I can do this exercise once tomorrow as well to account for today's big changes. And, these numbers may vary a little bit, but not too much, because we're looking at the aggregate picture. So 1767 stocks, NSE stocks, and look at this. How many stocks have returned over 60%? The number is 22, which is just about 1.2%. How many stocks have returned more than 40%? That's about 8% of the universe. By the way, you look at this. How many stocks have returned over 20%? That is 42% of the overall universe. 0 to 20%, basically stocks which have returned just under till about 20%, that is 36% of the stocks. And how many stocks are actually at levels as of Friday's close, which is below the March 24th level? I mean, that's 378 stocks, which is about 21%. Let's just stick to this graphic. Let's go back to the last graphic. I want to make one point. What is the right way to interpret this? Right? I mean, the way I would look at this is it's not bad. I mean, I would say, looking at the screen, that the broader market is not doing all that bad. The Nifty is bounced back about 17% from the March lows as of Friday. I mean, it'll be less today. And you've got, 42% of the market, which is bounced about 20% and more, right? This number will be larger because of the big decline that we are seeing right now. That's about 21% of the market, which is returned negative. But I mean, just this 20%, I don't think it's all that bad. That's how I would look at it, right? If you want to take one sort of point from this graphic in terms of how strong the bounce has been, I would focus on this, third row here. Okay, let's move on. This is pretty simple. Again, the start date is the close of 24th of March. Which have been the sectors which have performed well? Which have been the sectors which have performed, poorly? Pharma, infra, energy, the Nifty Next 50, which is the largest 50 stocks after the Nifty 50, auto and commodities, and the returns are here on your screen. You look at the stocks which have performed poorly, it's banks. I mean, PSU banks, the index actually is down 9% from the close of 24th of March. The bank index is just up 10%. Again, extremely weak bounce back. Real estate, barely 1%. Media, IT, and the central public sector enterprises are the others which have been laggards and which have been underperformers. Now I come to two graphics which are pretty interesting and which kind of tell you which is the weak link in the market, right? So what I've done here, these are the indices. I've taken Nifty and the Bank Nifty in the first one. So this is the retracement of the fall. This is basically the market fell from the highs in February to the lows of March, which is 7511, right? So this is that graphic. And then this is the retracement of the bounce. I mean, the Nifty, for example, from the low of 75.11 or so got to 9,900 approximately. So while this particular column is the retracement of the fall, the last column is the retracement of the bounce which we have seen, right? Now let's come to this. The Nifty bounced 50%, and this is something which I've put out in earlier graphics, earlier presentations as well. The Nifty bounced 50% from the lows, right? These are Fibonacci retracements. It's already, if you look at the bounce and you calculate the retracement of the bounce on the other side, it's already retraced 38%. That comes at 9,000, right? This is the Friday's close. We are, of course, about what, 8,800 roundabouts there. So we are below the 9,000, below the 38% level. But that's the Nifty. Now look at the Bank Nifty. The Bank Nifty did 38% of its the retracement of the fall. Only 38. Unlike the Nifty, which did 50%, the Bank Nifty did only 38%. But after an extremely weak bounce, it's already retraced 61.8% of the bounce. That's how weak the banking pack has been, right? So it's quite incredible. These levels in the brackets here basically are these exact retracement levels, and you could compare these levels to where we are right now, and you'd get a sense that, I mean, they won't change. Okay, let's come to the mid cap and the small cap part of the market now. This is the mid cap and the small cap, same criteria. The mid cap index retraced 38% of the fall. It's basically retraced 38% of the bounce as well now. That number is 12,500. You can compare it to where we are now. The small cap index, the small cap index is weak, by the way. The small cap index did not retrace 38% of the fall, while it has already retraced 38% of the bounce, the weaker bounce that it had. What is the takeaway from all of this? The takeaway is banks are clearly extremely weak. Can you say that because the Bank Nifty after a weak bounce has already retraced 61.8%, you know, things are poised for in a constructive way for the Bank Nifty? I don't know. You could equally make the other point that, well, they are going to go a lot lower. So that's open for interpretation. But the conclusive point is banks are extremely the weak link. The broader market bounce has not been bad. You know, the second-rung stocks are not collapsing. That is the second takeaway. And of course, I mean, the Nifty much stronger as compared to what, and maybe thanks to stocks like Reliance, HUL, etc., but relatively stronger as compared to what the banking universe is looking like. So that's, I mean, you know, just a quick roundup of where we are at this point in time. I think we've got Gautam Shah, technical strategist. He's been around for many market cycles. Of course, runs now Goldilocks Premium Research. Gautam, thanks very much for your time. Great to have you here. I mean, your own perspective on things, Gautam. How are things looking? And we have a big day on our hands now.
Morning, Prashant. Things don't look good. I think I made this point last week during an interaction with your channel that the market was looking toppish, and it went through a sort of a distribution phase in the first couple of weeks of May. And now with what happened on Friday and the confirmation that you have today morning, I think it's pretty clear that that distribution within that band of 9,050, 9,450 has been over. And, you know, the chances of the Nifty actually falling substantially from here is quite high. We were working with about a level of 88.20. So I think we're very close to that particular number. And once 88.20 gets broken, I think the Nifty can go down to a level of 83.60 and eventually closer to 8,000. And because we went through this patch of, you know, distribution, I don't think this is just going to be a one-off or a one-day kind of a decline. I think this is going to be a more of a trending move that can continue for the rest of May. And right now it's local, but I think like India, many other global markets have gone through their own distribution phases. And, you know, if markets like US, you know, end up breaking support levels, which I think is likely sometime this week, I think that's only going to impact India further. And also, I think just to put everything in perspective, there are no real contributors on the way up, but there are just too many contributors on the way down. You know, apart from maybe a healthcare or a Reliance, I think everything else has a very weak chart at this point of time. So clearly the market is trending, you know, currently, and this could continue for many days to many weeks.
Gautam, hi. Morning. So I think the question that a lot of people are asking, this severe underperformance by the Indian market. I mean, I was looking at any major global index. You look at the Dow, you look at the FTSE, the DAX. a market like Hong Kong has declined 2-3%, but India takes the cake so far in May. So what's next? Retest of March possible?
Well, Surabhi, I would like to take it one step at a time. I think I made this point some time back that because the memories of March are still very fresh in the minds of people, participants are expecting the fall to happen in the same way. I don't think that's going to happen. It's going to be a far more hard work decline. It is not going to be broad-based. I think you're already seeing the mid caps and small caps outperforming the large caps. And like in the period 2017-2018, where a handful of stocks took the Nifty higher, there is a strong case to believe that over the next 3 to 6 months, a handful of stocks which will actually take the Nifty lower. And in this very environment, you will have the mid caps and small caps do well. So I think it's going to be a very stock pickers kind of a market where you sell large caps and buy mid caps. In terms of the global framework, well, India has fallen pretty much in tandem with the rest of the world. But because many stocks in the Indian markets have already tested long-term supports in the month of March, I just feel that you might not underperform for a very long period of time, even though this is very clearly a global bear market and we're not going to get out of it in a hurry. The market requires a lot more time correction, which could continue over many months before we actually see stability on the screen.
Okay, Gautam, let's focus on the bank Nifty. I mean, fundamentals are poor.